Hi everybody, this is Jonah with ForexRaiser.com. Guys, we are here to discuss non-farm payroll, what it is, impact it's going to have on the market, and potentially how to trade it. The non-farm payroll we're discussing today is going to be released at 8:30 a.m. Eastern Standard Time on January 9th, which is tomorrow, guys. What you're looking at in front of you is four pairs. This is a 5-minute chart, and we're using this so we can get a good look at the actual release and how the movement takes place. We're looking at Pound USD, Euro USD, US Swissy, and US Yen. We also will look at some other pairs, some carries and carry crosses later on in the video, guys. But we're going to start off focusing with this. All right, first and foremost, guys, tomorrow's report is forecast for negative 500K. It's a very negative number, but not quite as negative as what we saw last month. Last month actually came in at negative 533K. A couple of pointers on this report, guys. ADP came in very, very negative at negative almost 670K negative on the ADP. ADP is a private report that is supposed to give employment numbers before non-farm. And of course, non-farm payroll is the government release of the employment figures for the month of December, whereas ADP is a private report. They do their own survey and come up with their own figures. And I'll tell you from personal experience and watching ADP since it's been in existence that ADP is not really a good indicator of non-farm. It's very seldomly close. Sometimes it can help give direction to let you know which side it is, but regardless, ADP is very, very negative, and typically their numbers are a little bit more conservative. So I'm of the mindset we might see some really negative figures here. But guys, let's start off with looking at last month's numbers here and looking at price action. Last month we were forecasted to move. Forecasted at negative 530. Forecasted at negative 320K, guys. Actual number came in at negative 533. Very big deviation of about 213,000 jobs. So this is a big, big deviation. And what we see because of this big deviation, you can see right here on your chart, guys, this is your December non-farm. Non-farm is released at 8:30. You see this huge move down? This is US yen. This is what you're looking for, guys. This is ridiculous. When you see a big hammer like this and you've got huge deviations, you use this as entry, guys. This is a big move down. It retraces all the way back and gives you opportunity to enter. Also, you can look at some of the other pairs here as they released as well. Now, you have a little bit of an opposite reaction on Euro and Pound than you would expect. This is what's called risk aversion. We were in that a little bit last month, not in it quite as much this month, and I don't anticipate getting quite as much of risk aversion reaction, which means that if the pound goes up, the euro should go up, the US yen should go down. That's the way they typically run. As you can see here, they all move in tandem outside the initial spike. The initial spike, they went the right way, and we'll discuss in a little bit how you can utilize this too. But just keep this in mind, guys. Look for the pullback. When you see a negative number or a big deviation and you get your price back to pre-release, this is where you want to enter. This is where you want to enter. You don't have to be a spike trader. We're not talking about spike trading. We're talking about looking for the opportunity and taking advantage of it. Now, let's pull down to November. November wasn't quite as bad. Actual number is negative 240K. Forecast was negative 200K. Still pretty negative data, but as you can see, the market didn't react nearly as well to this information. Here's your release, right? Spikes down, comes back up, tries to push back down again. Again, this is US yen, but then it ultimately moves up. Now, the reason for this, guys, is this was only a 40K deviation, okay? And where we're at, typically a 40K deviation is pretty decent on non-farm. But where we're at in the economy, guys, is everybody is so negative on the U.S. economy right now, we've really got to have shocking numbers. Here's a good threshold to keep in mind. 100K deviation to the downside is worth trading. Anything less than that, I'd probably stay out and maybe look for a correlation trade. But I don't think I would trade it directional, okay? So 100K, so tomorrow we're forecast at negative 500. You need to see at least negative 600 to get involved. Now, if we see positive numbers, you probably don't want to see quite as much. I would look for right around 50K positive So if it comes out negative 450, then you'd have dollar strength. Okay, so let me clarify, guys. Negative numbers for non-farm are bad for the U.S. dollar. So the other pair should be gaining strength, just like here, where you see this gaining strength against the U.S. dollar. Negative figures gaining strength. Now, it didn't last very long. You can see this move was somewhat short-lived, but it still had a decent amount of momentum in it. You see 80 pips on euro, about 60 pips. 60 pips on euro, about 80 pips on pound. So still a decent amount of momentum. But again, I would look for 100 to the downside, 50 to the positive side. Let's take a look at October. Again, guys, this is October that we're looking at, non-farm. This forecast was at negative 100K, okay, and we came in negative 59K. But this was a perfect example of how the market had already priced in bad numbers, guys. You see this? Movement up on US yen. This is the release. It spikes down just for a second and comes up. All right, so a few key points to keep in mind, guys. We're not going to go on all day long about this. We do a little bit more in detail training in our training sessions. But when you're looking at non-farm tomorrow, keep in mind people are priced in when it comes to negative US dollar data. It's very priced in, especially after ADP. So you really want to see big numbers. You know, I say 100, you might even want to see 200. I mean, that's the reality of this, guys. It's not going to impact the market nearly as much with negative data as it will with positive data. One more thing I want to touch base on, guys, before we go. Okay, I just wanted to talk about the carries and some options for trading carries here. Again, we're just touching on a few different strategies that you can use here. This is US yen, and pound USD, and I wanted to show you the correlations here, guys. See this little hammer? This is October non-farm that we're looking at. See how this is pound yen on a minute chart, guys. Minute. See how it pops down here and retraces? Just to get your bearings on how far down that is, guys. This is 85.36. It comes all the way down to 84.89. So we're talking about 50 pips, right? Pops down, pops back up. And the reason for this, guys, is that you have pound USD or US yen reacts before the other. Okay, meaning one of these pairs starts moving before the other one does. Now, they'll balance each other out, and we can see this over and over again. Let's look at November. See, moves down, comes right back up. This is pound yen. December. Here's your release. Spikes down, comes right back up. And this will happen just about any time you get major U.S. data. And it's not just pound yen. You can do it on any yen cross outside of the U.S. yen. U.S. yen is going to trade directional to the U.S. data. Any other cross, you could use euro pound. You can do the same thing. You know, you want to look at pound USD, euro USD, and then grab your euro pound. And one pair will react before the others. But the bottom line is that the yen's not getting stronger. The pound's not getting stronger or weaker. The dollar is the one moving because this is U.S. dollar data. So in theory, it should move all the pairs the same. And this is an example of that when you see these little anomalies, guys. So anyway, quick recap. We're running a little long, but quick recap. Tomorrow's forecast, negative 500, guys. Look for the big move after this report. Okay? Look for the big move after this report. Looking for it to start trending. That trend should probably continue for you. But keep in mind, when you're looking at these numbers, guys, that the dollar is already weak. People are expecting very weak data. So remember to trade positive U.S. data much heavier than trading negative U.S. data. And what I mean by that is expect a lot more out of positive U.S. data than you do negative U.S. data. All right, guys, good luck with your non-farm, and hopefully y'all have a great day. We'll check you back tomorrow.